We expect the euro area to be growing a little bit below 1.5% in the course of 2017. We are eating into slack in the euro area that's accumulated as a consequence of the recessions we've seen over the last decade. And as we eat into that slack, the disinflationary pressures in Europe will start to abate. Unemployment at the area-wide level will continue to come down, and slowly the European economy will move back towards a more stable situation. As we enter 2017, the drivers of growth in demand in Europe, I think, are going to be shifting quite importantly. Probably the most important one will be easier fiscal policy in Europe. And as a result, at least on a kind of accounting basis, the main reason why the euro area is able to grow above trend is really owing to this macroeconomic policy easing, with fiscal support for demand being at the center of it. The biggest downside risks probably come from the political side rather than the more narrowly defined economic and financial side. I think given the fact that we will see elections in some of the main European countries in the course of 2017, Germany, France, and given the opinion polls which point to quite strong performance by some populist and/or Eurosceptic parties, the danger that the sort of political pro-European equilibrium that's existed not just over recent years but really in Europe over the last 50 or 60 years could be disturbed is one that has the potential to change the market and macroeconomic outlook. That isn't our base case. Both the institutional setup in Europe means that those populist parties probably still have some way to go to achieve meaningful power in most of the leading European countries. In the UK, we are expecting a moderate slowdown in the growth of the British economy, comparable to those we see in other parts of Europe of around 1.5% in 2017, reflecting the fact that both higher inflation as a result of the depreciation of sterling following the Brexit referendum is likely to erode households' real incomes and probably constrain consumption, while at the same time the uncertainty about where the UK's situation and relationship with the rest of Europe will go will weigh to some extent on firms' willingness to invest in new plant and make longer-term hiring decisions. So I think the big picture in Europe remains one of continued muddling through. Growth at a sufficient pace to keep the wheels turning, but nonetheless not growth sufficient to really solve the underlying institutional weaknesses in the euro area, structural weaknesses in the European economy, and allow Europe to really escape from the low growth and really low confidence equilibrium that it's been in for a couple of years now.